Good evening. Ira Epstein, and here we are with your SPDR-ETF stock market wrap-up. And this wrap-up is for the evening as we're here now on July 29th, 2024. Now, we have a lot of data, general economic data, besides earnings. This is a big week for earnings. A lot of the Mag 7 companies coming out. We saw McDonald's today missed on everything, yet the stock went up 3%. You go figure that. All right, almost 4% actually. Redbook Group. We'll update their U.S. retail sales data tomorrow at 7:55. We've been getting some weaker data. That should be interesting. Case-Shiller 20 metro home area prices. Will they continue to go up as they've been doing? They're on affordable 9. Why not just raise the price? Nobody's buying them. The Federal Reserve will begin their first day of monetary policy deliberations tomorrow. They'll end up on Wednesday at 1 o'clock with their monetary policy statement, and then the press conference at 1:30. We get the Conference Board U.S. Consumer Confidence Index. That comes out tomorrow at 9. The bigger report, I think, of the day is this, the Jobs Opening and Labor Turnover Survey, JOLTS as it's called. That comes out at 9, and then we're going to get the API numbers on what goes on in energy. And the good news today, the U.S. did buy back about 4.5 million barrels of oil under the tender that the Biden administration put out last month. So congratulations. That was a really nice deal they did. They sold in the 90s and bought this one back under $77 a barrel. I think I have a position for Joe when he's through being president. He seems to have trader's instincts. All right. So it's earnings, it's wild markets. This market has to settle in and get all this. You know the market is major league anticipating a September cut with some banks, Morgan Stanley, now 3 cuts coming, Goldman 2 cuts. I mean, it goes on and on. But you got to get the data to prove it. And so now this is where it is. You know, this is where the rubber meets the road. Is the data weakening? Yeah, give you an idea. You got a jobs report Friday. If that data is stronger than expected, is September really going to be the month that you do it? But I don't think that matters. We know cuts are coming. We know that inflation numbers are falling. We see it. We are seeing wobbling in the labor market. Whether one report or not doesn't matter. But it'd be nice to have the 3 that I talked about literally starting in the spring that the Fed would love to get 3 months in a row of weakening data, and they'd feel very good that they can go down in history as this is the point in time to make the cut, and they won't have to go back to raising it right away. That's what I think is lurking in Fed Chair Powell's mind. He doesn't want to be Volcker. He doesn't want to get caught with any that started cutting and then couldn't keep the process going to get the economy where they want. Will it be a soft landing? Well, the mathematical odds are against it, but guess what? This whole market has been against the mathematical odds. And right now, with good employment the way it is on a relative basis, even getting the 4.1% unemployment that we're sitting at, by historical standards, that's a pretty low number. When's the last time you remember? We're up now 0.4 off the low from 3.7%. But in the past, was 3.7 unemployment in America really a low number? Was it even a number? The pandemic changed things around. I'm looking at utilities for a reason. Number one, it's a safe haven. Number two, low interest rates help utilities. And ever since in July, they started talking about Fed cuts getting more serious, this market has come alive. I see higher lows, higher highs. We have a market that has stayed since early July. Once it got over the 18-day average of closes, it has stayed there. And the next resistance point, again, is the upper Bollinger Band, and it has a habit of hitting it and turning back from it, which is very good technical action, and you're overbought. So I'm not convinced traders are going to massively deploy when you're overbought, but there's no reason to be short. If anything, they bought some breaks and they're taking some money off the table. CrowdStrike isn't over on the downside. Now, Delta Airlines is issued a lawsuit. They want money from Microsoft and CrowdStrike for the damage done to them via, especially CrowdStrike, with that bad update. Okay, that's the first. There'll be more. You know, I always hear traders wanting to rush in and buy it. No, you're supposed to sell the first good rallies. You have an embedded reading. You're not looking to buy until and unless the red line closes over 21. Until that occurs, no way to tell where this market's going. Uranium. I have clients that follow this and they're married to it. This is going to make them rich. This is a bear market. You have an embedded reading. It's still bearish until the red line's over 21. Traders are probably selling this, and you're about to get a bearish crossover where the 18-day average looks like it's going to get under the 200-day. In Rivian, you have lower highs, lower lows, the market fighting a battle right here to be good, to catch traders and want to be bullish. You cannot take out 1585, and you need to take out 1590. That would do the job. Take out 1585, though, and you open the door up to go to between 1466, the Bollinger Band, and the 100-day average. Okay, I can see that happening. In FCX, the euro currency, I'm sorry, I keep thinking FC, euros. All right, Freeport, still bearish. No sign of anything good. It looks like it wants to embed, in fact. Both numbers are under 20. They were under 20 on Friday, and were they that way on Thursday? Lo and behold, they were. That was the first day. So any bounce of size tomorrow gets interesting because I think the pros will look at the market, and as long as the red line is over 21, I think they'll sell a good rally in it, but I don't think they'll sell into the whole lower prices on this market. Trend is down, bias down until it turns. Home builders, as you know, all of them, I don't care if it's Pulte, I don't care if it's KB, they've all benefited from the idea that interest rates are coming down. And while they may have missed this season, which I think they have, I want to be clear on that, they'll catch it up later because there's pent-up demand. And if mortgages can get anywhere near 6%, I think you'll open the spigot. Anything under 6, even a 5.99, I think you'll get a rush back into the housing market. And remember, we saw abnormal mortgages at 2 and 3%. That's not the norm. 4% is more the norm, 5%. So I think they'll pay up a little bit and not be worried. You've had a bullish crossover and you're making new highs on the move, which is what I teach. You are what? Did we embed? Well, both numbers are over 80 on today. Both numbers were over 80 on Friday, and both numbers were over 80 on Thursday. In fact, they were that way the days before. So you've been embedded. Good breaks in the market. Guess what I think the pros will do? I think they'll gobble it up on the break. I'll be talking to my subscribers in the morning in my video and giving them probably entry marks that I'll look at on a chart like that. XHB, lower low, higher high. Again, is it going to embed? It's not there yet. It's just overbought, but it does have a target all the way up at that band. And again, this is euphoria because finally we might get real breaks in the markets. The 10-year note today went to 417. Mortgages do follow that. You have a lower low, higher high in XLF. You are void of a trend, but you've maintained upside bias since the beginning of the month, July. You've stayed over that 18-day average of closes. XLI had a bear market. Well, let me call it the right way. A bull market break. Why? Because you've been over the 18-day average. You got a sell signal that the market was coming back down off the swing line with lower highs, lower lows. Found its legs right at the 100-day average in the 18, and over the past 72 hours have moved pretty much to the upside. Energies, I'm bearish here. Any close now under the 18-day average looks even more bearish. You've got the lower highs, the lower low. You need to close back under it, and I think you're going to attract the bears in the market. In the gold market, be aware of this market. Got to be careful here. Traders will look at anything in these reports coming up that locks in their minds that the Fed is going to cut rates even more than they've got it locked in. In other words, a weak JOLTS report should be bullish in the metal markets because it's inflationary down the road. The Fed's cutting rates, they're trying to spur on the economy. To spur on the economy, you're trying to create demand in the economy. To create demand, you consume things. Got the story? I mean, it rolls. And I'll be watching that. I think getting over Friday's high would be a warning sign not to be short. You're already oversold. Silver market is much weaker than the gold markets, as is copper market. You can see how they've just been falling down. Big support here at 40.26 to 40.48. But come on, that's a break low that you haven't been back since almost the beginning of the year. So that's the market under pressure. TLT, well, this is a market that's had a vertical move to the upside. It's controlled, but it's a vertical move regardless as the market anticipates a Fed move. The dollar is bullish until we take out Friday's low, in my opinion, and the euro currency is bearish. Now, we are getting oversold in the euro and we're overbought in the dollar, but those are the conditions that I'm seeing those two markets in. Get our market reports. Especially tomorrow, you want to get them. Why? We're going to cover in great detail the reaction to jolts. We're going to cover in big detail the other areas of the market that you should be looking at. And as you put this all together and you look at them, the price counts, we'll be covering what the financial markets are doing with them this week, one market after the other. And you want to look at them. Where's the big picture? Where's the move coming from? What's going to take place? How do you get all this? Our charting service and the like? Well, you simply go to iraepstein.com, free offers. You hit the cursor. Also, if you move your cursor to the top, you'll see an icon. Give it a click, and away you go. With that, I'm Ira Epstein. You have yourself a good evening. I will catch up with everybody first thing in the morning.